Hello guys, welcome back to UCL Forest Academy. Once again, you're welcome back to UCL Forest channel here on YouTube. And in today's lesson, we're going to be talking about top-down analysis. In today's lesson, I'm going to be trying to explain to you guys everything you need to know about top-down analysis. All you have to do is to watch the lesson to the end. What is the importance of a particular lesson, or why is this lesson so important for you to know? This very particular lesson will enable you to know how to make analysis from higher time frame down to lower time frame in search of a good entry opportunity. This top-down analysis lesson is also here to enable you to understand where the market is pushing to or where the market is actually heading to. You also, with the help of top-down analysis, you'll be able to see the bigger picture of the market, and you know when to exit those orders that you have when you are taking a counter trend whenever the market actually tests a higher time frame key level. There are a couple of things I'm going to expose on today's lesson. All you have to do is to make sure you watch the lesson to the end, and please like and subscribe to the YouTube channel. Leave the notification button on. You guys know I've been doing quality tutorial content here on YouTube that are here to enable you to understand how to trade the forex market. All you have to do is leave the notification button on, so each time I drop a new lesson, you will be the first person to be notified by YouTube that I've already made a new lesson. Okay, so I think we have to start the lesson right away. But before I begin the lesson, I also want to remind you guys that our online class program is still running. All you have to do is to use the number you are seeing on the screen and register. It is a private mentorship class. Believe me, the moment you enroll, we are mentoring you privately. We're going to try as much as we can to make sure you understand how to trade the forex market. It's not going to be like the usual online class you have been to before. Yeah, we won't disappoint you because we're going to try to keep all our promises. All you have to do is to use the number on the screen, reach out to us on WhatsApp, ask us a couple of questions you want to ask us, and then everything will be there always to answer you. Always, as a foreigner, you use 80 USD to join, and as in somebody residing within Nigeria, it is all about 50 USD, and you are part of the program. Remember, it's a lifetime mentorship program. Okay, so now we're going to be entering the lesson right away to explain what is top-down analysis and how we can practice a good top-down analysis. So first of all, I want to start by defining top-down analysis again to you guys, and then I see top-down analysis is art of analyzing the market from higher time frame down to lower time frame in search of a good entry opportunity. Most of us will approach the chart this way. We'll look at the chart from 5 minutes time frame. Some of us will be targeting 1:4 or maybe like 40 or 50 pips. All of a sudden, the market will just give you like 20 or 10 pips. The next thing, the market will start going against you. The next thing, the market hit your stop loss, and you start wondering, is this thing not really correct? I think this is my setup and all this kind of thing. Maybe you don't know that you are taking this setup at a higher time frame key level, and you are going against the trend. Just imagine that you were actually trying to buy immediately. You are actually trying to sell immediately. The market tested here. Maybe you are on like 5 minutes time frame or 15 minutes time frame, and you are trying to sell immediately. The market tested a higher time frame key level, and what happened? The next thing, the market tag you out and start pushing to the upside. Then, because you are not actually looking at the bigger picture of the market, that was the reason why all those things what happened. So top down analysis is there to help you to see the bigger picture of the market, and for you to follow the trend very well. You know, there's a say they normally say that if you don't know the direction of the trend, or if you go against the trend, that the market will hit your stop loss. You don't need to go against the trend. Okay, so the truth of the matter now is that we have different type of traders. We have swing traders, we have day traders, we have scalpers. I'm going to concentrate more on the day trader because I know majority of us are day traders, regardless of how many days we care to hold the chart. But we know that we never hold I believe that most of it doesn't really hold the market for like more than 2 months or 3 months as a swing traders. But with this, I'm going to be explaining more on day traders. So these day traders, they have a different time frame they make their analysis. Always get what I'm saying correct. They have the different time frame they make their analysis. They start the analysis from a daily time frame. That's the day traders analysis. The day traders time frame, they start from what? From a daily time frame. What are they looking at on a daily time frame? They want to see the trend of the market on a daily time frame. That is to say, if the market is bullish like this on a daily time frame, if the market is bullish like this on a daily time frame, the market is breaking structures to the upside like this, and now the market has actually break a structure this way. Now they have known that the market is bullish. So what they are to do now is to concentrate more on buying and not to sell. Is concentrate more on what? On buying and not to sell. Because they know that when they concentrate more on buying, they are going to catch a more longer trend than what? Than sales. The truth of the matter now is that yes, we have known that the market is bullish on a daily time frame. Most of us have seen that we have a BOS here on a daily time frame. Now, some of us will now scale down to like 30 minutes time frame or 15 minutes time frame to start taking a counter trend. What is the counter trend? This is now when you are going against the trend. This is now when you are going against the higher time frame trend. Now, because you have known that the market has break its structure, you know exactly that the market is going to start returning back like this, right? After you must have spotted a change of character. The moment you are doing this kind of thing, you are taking a counter trend. It is the least expected of you to wait for the market to pull all the way back to a higher time frame level and then to take it up again. That is what you are being expected to do. But most of us doesn't really have that patience. But if clearly you want to practice a very good top-down analysis, all you have to do is to concentrate more on when the market will return back to a higher time frame key level you buy. That is to say, you have to plot your Fibonacci retracement tool from here and up to the particular high. Remember that before you start plotting that fib, you need to make sure that the market is already returning back like this. The market is what is already returning back. So when you are going down to 4 hour time frame, you want to mark out a zone where you feel the market is going to reverse from. You want to mark out a what? A zone where you feel the market is going to reverse from. So one of those zones can be a 61% key level or a 78% key level. That is to say, if the market pull all the way back to a daily time frame 61% key level, now you are looking for a change of character around that zone. You are looking for what? A change of character around that zone to keep buying price to the upside. Are you getting me now? You are looking for what? A change of character around the daily time frame 61% zone to buy to the upside. If you didn't see that change of character around that zone, you are now waiting for the market to return back to the 78 now to push to the upside as well. Are you getting me now? So that is exactly what to do when you want to truly follow the trend. And when you are doing this thing, there's a higher tendency that you're going to catch more buys than what than sell. Because the truth of the matter now, we all know that the market is already bullish on a daily time frame, and then you came down to a 30 minutes time frame and you saw that the market is selling. The reason why the market is selling is because the market has actually broke a higher time frame level, and there's a higher tendency for the market to give a full retracement or shallow retracement. But you also need to know that the market can just buy a little and then decide to go up again and decide what and decide to go up again. Something like this can actually happen. That's when you are taking a counter trend. You don't know how far price will sell before it pushed to the upside. But when you concentrate more on buy, and there's a higher tendency that you're going to make more reward than what than the opposite. Are you getting me now? So on 4 hour time frame, you are meant to mark out your zone. On 2 hour time frame, you are also meant to refine that very particular zone. So let's say you mark out your zone. If you still don't know how to refine zones, why don't you go to my YouTube channel? There's a lesson I did on this particular channel. I created a playlist and I did a lesson on the market structure VIP lesson. All you have to do is go and watch this lesson. There's a lot of values on that very particular lesson that are there to assist you on how to trade the forex market, okay, on how to mark out your zones. Just go and watch it, and you're going to come back to know how to refine zones very, very well. But if you still don't understand, because this lesson is not really meant for me to explain how to refine zones, but if you still don't understand, here is how it works. So let's say the market now, they say that this particular zone can be your this particular stock can be a non-mitigated level, can be somewhere around there. So if you mark this kind of thing on a 4 hour time frame, you just need to make use of the half of it on a 2 hour time frame. You just make a what? You just need to make you just need to make use of it like the 2 hour, as in the half of the zone on 2 hour time frame. Are you getting me? I just have to refine it down to a 2 hour time frame what point of interest. So when you refine it down to a 2 hour time frame point of interest, now when the market return back to that very particular zone, you can either go in aggressively. If you love using pending order, you can either go in aggressively to buy to the upside, or you wait for change of character on a 30 minutes time frame or 15 minutes time frame around that very particular zone before you purchase price to the world to the upside. Always remember that you can make use of a 2 hour time frame or 1 hour time frame in terms of refining your zones. In terms of what? Refining your zones. Why do you need to refine your zones? The zones, sometimes you mark out a zone on 4 hour time frame, only for you to scale down to 2 hour time frame. You come to realize that those zones are so massive, they are so big, and you don't want to risk that big. Then all you have to do is to reduce. Refine it, just reduce the zone. But you have to reduce it very, very accurately, because you don't need to reduce it just commonly. No, you need to reduce it by using the half of the 4 hour time frame point of interest, and then that is it. Are you getting me now? By using the half of that 4 hour time frame point of interest, you have already gotten the 2 hour time frame point of interest. By using the half of the 2 hour time frame point of interest, you have already gotten the 1 hour time frame point of interest, which is this very particular thing. I will always recommend you to go and watch that market structure VIP lesson so that you will know how to mark out a POI and then how to equally refine that very particular POY. Okay, so now this is how we can actually follow the trend. But let's say you want to go against the trend, always make sure you see a change of character. And each time the market hits your stop loss, I don't want you to feel bad because you have already known that you are going against the trend. But there's something we call a trading range. There's something we call what? A trading range. The fact we have seen that the market is bullish on a daily time frame, it's certainly going to take like days for the market to return back to some key levels. Are you getting me now? Sometimes it might take like 4 days, 5 days, a week, or sometimes if the market is very volatile, it might return back to that zone like after 3 days or like after 1 week. Who knows whether you can be able to wait for after 1 week, especially those that trade one or two pairs. Are you getting me now? So if you don't, if you trade one or two pairs, that means you are going to be always be trading counter trend because you will always jump in into the market since you see that the market is bullish on a 4 hour time frame, on a 1 hour time frame, or 30 minutes time frame. You want to take a counter trend and you start selling till the market get to that very particular unmitigated level. You start selling till the market get to what? To that very particular unmitigated level. But while you are selling, if the market eventually hits your stop loss, you don't need to feel bad because you know you are actually going against the trend. You actually what's going against. But if you trade multiple pairs like me, all you have to do is to go to other pairs. Go to other pairs because I know we must have done this in like 3 or 4 or 6 pairs. You are going to see the one that is very, very closer to your zone. Are you getting that? So now let me now show you, or let's now try to explain what is a trading range and how a trading range will always help you to know that the overall trend that you saw on a daily time frame has switched from a bullish trend to a bearish trend. Are you getting me now? So now let's say that you came to the market and let's use for a bearish market. You came to the market is dropping to the downside like this, and this is what you saw on a daily time frame. It is expected of you to wait for the market to return back like this. It is what is expected of you to wait for the market to return back to something like a 61% zone or 78% zone before you start selling again to the downside. So while you are waiting for the market, it might take so long. But those that normally love trading counter trend will jump into this market the moment they have seen a change of character and now they will start buying. Immediately the market get to that very particular discount zone. Let's say the market pulled all the way back to a 78% discount zone. All you have to do is to scale down to something like a what scale down to something like a 1 hour time frame or 30 minutes time frame and look for a reversal pattern like this. And look for what? A reversal pattern like this. Are you getting me now? So the moment you spotted a change of character around that zone, then you will know that this particular level will actually hold the market. We what? We hold the market, and then the next thing you now start selling to the downside, and that will enable you, and that will give you more confirmed reason that the market is going to chase to take out the very particular what external structure because it's very very important. It's very very simple. When the market print a new low, it printed a new high. The market has now printed a new low. It's now printing a new high. It is highly expected of the market to now print a new low, which that low will not take out the very particular what low. Are you getting me now? Very simple. Okay, so this is what you actually do on a 30 minutes time frame on looking for a change of character. But the person that love going in aggressively must have just placed his order there. But I just want to tell you that you don't just place your order the moment you see that the market is pulling all the way back to a 61% daily time frame zone or 78% daily time frame zone. You don't just put your orders there immediately. All you have to do is to wait for a reversal pattern. You need to wait for what? A reversal pattern. It can be change of character, it can be double bottom, it can be double top, it can be fell swing high, it can be checkmate. Any pattern of reversal pattern you already know, you can use it at that very particular zone to start selling price to the downside. By doing so, you are actually following the trend. So let's say the market actually drop a little like this. The next thing the market now push aggressively and break a structure to the upside. Now the market has actually swept a high above. The market has what? Has swept the very particular high. So the moment you must have seen this kind of thing, this is a what? This is actually what we call a trading range because the market has actually swept a high. And whenever the market swept that very particular high, it is actually telling you that the overall trend has shifted from a bearish trend to a bullish trend. Has shifted from what? From a bearish trend to a bullish trend. Now, the truth of the matter is that you don't need to feel bad because number one reason is that you took a trade from the extreme point of interest You are not among those that we are trying to sell price. Whenever price reaches a little, they want to sell. Whenever price they want to sell. Those kind of things. No. But because you took a trade from the extreme, the moment the market came and the market disrespected that zone, break above it, you will now have what to call what a change of character. And this change of character was initiated from a daily time frame. It was what initiated from a daily time frame. And then you and I knows that the market will now want to give a reversal like this. The market will now want to give what a reversal. You can jump in to look for a change of character like this to start selling when the market retraces back to a 61% level of the particular level, or 78% level of it. Are you getting me now? So how do you do that? All you have to do is to plot your Fibonacci retracement tool from this low and drag it up to a particular what high. So here will be your number one reversal pattern. Here will be your number one what? Here will be the number one place you actually need to know that the market might reverse from. Are you getting that? Here will be the number one place because this is 61% level and there's a higher tendency that the market might want to respect it to start pushing to the upside. So while you are selling, you need to be pay very attention. Even if the market is giving you something like a good pattern like this, immediately the market mitigated that level. All you have to know that now the market has touched a higher time frame level. It has touched what? A higher time frame discount level. And the higher tendency you might see a massive buy to the upside. So it is either you look for a change of character to start selling to the downside. Now, most of you are going to ask me a question like this. You're going to ask me a question this way. You're going to ask me, what if the market actually retreat back and mitigate this very particular level? That is why I said you need to see a change of character like this. You need to see what a change of character. If you spotted a change of character like this on a 30 minutes time frame around that 61% level, all you have to do is to go in for a buy. Your fixed take profit should target this very particular high. Your fixed take profit should target this very particular what high. So when the markets return back there and hit your take profit, now start looking at what the market wants to do. Either whether the market want to respect the end, whether the market want to what respect it. If the market end up respecting that zone and give you another reversal pattern around that very particular zone on like 15 minutes time frame or 30 minutes time frame, now you now need to know that there's a higher tendency that the market want to pull all the way back to a 78% zone before pushing to the upside. Are you getting me now? If you spotted a change of character around here, let's say you spotted a change of character at the system you were selling before and your massive profit, the market has now hit a daily time frame 61% zone. And you need to know that there's a higher things that this thing is going to buy because what? Let's remove this thing. Because we saw a BOS. And all these things can serve as a full retracement for price to push to the upside. And all these things can serve as a full retracement or a mitigation or pullback or anything you care to call it for the market to push to the upside. So what number one thing you need to do is what? Wait for a change of character around that 61% zone. Are you getting me now? Wait for a change of character. If you did not see a change of character around that 61% zone, you now know that we have an unmitigated level here. But before you take a trade for any particular unmitigated level, you need to see another reversal pattern on a lower time frame like 30 minutes time frame or 15 minutes time frame. If you spotted a reversal pattern here on a 30 minutes time frame, that is to tell you that the sell still continues and maybe the market want to use the 78% zone before pushing to the upside. Are you getting me now? But if the market now breaks above that very particular level, if the market now, let's say the market did something that look like this, let's say the market now break above that level on a 1 hour or 4 hour time frame. Let's say the market break above it like this. Now the market has given you an internal structural change of character. What are you expected to do? Wait for your retracement and take price up. Are you getting me now? So while you are practicing a top-down analysis, you need to understand that there's a point you need to wait. While you are waiting, you are paying attention or you are concentrating on what price is actually doing. There's a two different. There's this thing that traders normally do. There's something we call what you want the market to do versus what the market wants to do. Or let me just use this one and say what you want to see on the chart. Like most of us will come to chart. There's something we want to see, like what we want to see what you want to see, or you can see what you want the market to do, what you want the market to do for you, actually to do for you, okay? And there's a big difference of this particular first statement I made, what you want to see on the chart or what you want the market to do. I think two of them are the same, right? And then there's a big difference of this particular statement, what you are seeing on the chart, seeing, what you are seeing on the chart. So that is it now. So there's a very big difference between these two things now. The first one is that you actually want the market to do one particular thing for you, but there's something that the market is actually showing you on the chart which you don't want to do, and that is this. So let's say that when the market was actually, let's say you were selling, right? You were selling like this. The market is giving you massive profit. You are not really paying attention to what has happened in the past. You feel that this sales is going to continue for a long period of time. You are not actually looking at what is happening, and then you have marked out a zone like this. The market must have even come up like this and give you an inducement level of that very particular zone like this, and you'll be very very happy that you have spotted an inducement level in front of the very particular what point of interest. Now the truth of the matter is that since you are not actually looking at the very particular structures on a daily time frame to even see whether this market has given a full retracement of a particular swing, are you getting me now? Since you're not looking at it at a daily time frame, then there's a higher tendency that you just want the market to respect your zone. You just want the market to what? To respect your zone. And if at the end of the whole day, if market breaks above your zone, now that is what the market want to do. The market was actually displaying something for you, but since you are not looking at it, you are busy concentrating more and something you want the market to do. At the end of the whole day, the market now will tag you out. Okay, so what I expect you to do is to complete your analysis, the daily time frame analysis, and your 4 hour time frame or 2 hour time frame. The only time you need to pay a visit to a lower time frame should be whenever the market return back to a new zone. Then you now look for a change of character around that zone to take it up or to take it down, depending on the trend of the market. Now, let me take you straight to the chart on Euro AUD because I've used the diagram to explain a couple of things about how to follow a trend versus also how to take a counter trend. And I know that things are making more sense now, but we know when you get to the chart, it could look more a little bit confusing. But don't worry about that. We're going to use multiple examples. All I want you to do is to make sure you watch the lesson to the end because at the end of watching this lesson, a lot of things is going to be an eye opener to you, which you will come back to leave, which you come back to thank me for what I've done for you. Okay, now first of all, before doing a top-down analysis, what do you do first? You have to clear the entire chart. You have to do what? Clear the entire chart. Why are you clearing the chart? You want to see the market nakedly, number one. You want to see the chart without no drawings, without anything. You need, whenever you go to a higher time frame, by mainly looking at the chart, you will be able to tell where the market is heading to even before drawing anything. If you come to the chart and you look at the chart and you could not be able to say, you cannot be able to interpret what the market is doing, there's going to be a higher tendency that if you start drawing those lines, you are just adding more to your confusion. Are you getting me now? So that is it. So by mainly looking at it, you should actually know where the market is going to or what the market actually want to do. So what is Euro AUD doing on a daily time frame? By mainly looking at the chart, the market is bullish. The market is what is bullish. As we can see, the market has actually break a structure to the upside like this. The market is clearly what bullish on a daily time frame. So what are we expected to do on a 4 hour time frame? We are just expected to mark out our point of interest. We are just expected to what? To mark out our point of interest. Now, with what we can see on a daily time frame, Euro AUD has overbought. Euro AUD has what? Has overbought. You see this kind of thing? This is what we mean what? Overbought. This is a period of time when the market will be pushing aggressively to the upside. There will be a time the market need to give a full retracement of it. A full what? A full retracement of that very particular word swing. This is what I mean by what swing. I call this thing what swing. So the market has breaking a structure. Somewhere around here, the market is consolidating. So if you start seeing the market selling massively for a long period of time, you don't need to say that the market doesn't know what it's doing. You just need to know that there's a time that AUD has overbought, and now the market wants to return back to somewhere around the 61 or 78 before pushing again to the upside. So all we have to do, if you actually want to get those key levels on a daily time frame, all you have to do is to make use of a Fibonacci retracement tool. There's a lesson I did on Fibonacci retracement tool still on that YouTube channel. All you have to do is to go to that YouTube channel, go to playlist, come down to the very particular place I wrote I wrote a Fibonacci retracement 2 lessons. Just go and watch it. Do yourself a favor. This very market is all about you learning every day and getting used to what the chart is doing, and that is the only way you can stay profitable. So if you actually plot your fee from a particular low and drag it up to a particular high, you can actually see that this very particular level is our previous, this very particular zone is our 61% level. That is this very particular previous resistance zone turn support is now our 61% level. The next zone there is our 78% zone, which is here. This is our 78% zone, and these are like a higher time frame key levels. These are like what, a higher time frame key levels. But I'm not going to be making use of this particular massive zone. All I'm going to do is I'm going to refine it. I don't even need to. Sometimes when I mark out a zone on a daily time frame, I don't need to scale down to 4 hour time frame to know whether it is a point of interest. I've always told you guys the half of that very particular structure, the half of that very particular daily time frame zone is already a 4 hour time frame point of interest. So what I'm going to do now is I'm going to keep this horizontal tail at the half of it like this, and then I just need to refine it this way. So I will refine it and keep it like this, and then now remove the particular tool. So now with what I've seen now, I've been able to mark out my key levels where I am going to take a long-term bias on the chart. That is to say, if the market return back to somewhere around there, if the market return back to somewhere around there, I will now look for a change of character on a 30 minutes time frame to take price to the upside. Are you getting me now? So, but the truth of the matter now with what you can see here is going to take some time for the market to get here. But when we get down to daily to 4 hour time frame, we might at the end of the whole day see what we call a trading range. See what we call what, a trading range. But with what you can see on a Euro AUD on 4 hour time frame, you can actually see that the market has taken out a low. Yeah, you can see the market has actually taken out a what, a low. Can you get me now? So this is number one serving as our daily time frame change of character. But it is not really yet a change of character if when the market opens you spotted a 30 minutes change of character around even particular level. Are you getting me now? So sorry, that very particular trade I took was this very particular massive buy. Are you getting me now? That very particular trade I saw I took was this very particular massive buy, and I'm going to show you guys how I was able to do that. But first of all, let's see how I was able to do that. Then we'll now retrace back to see what Euro AUD might likely do when the market open. So now we'll go down to 4 hour time frame. So on 4 hour time frame, remember what I told you guys. I want to show you guys what I did first when I came to the chart before we will now talk about for the change of character of a thing. So I spotted that Euro AUD has been buying for a long period of time, and what I saw here was another a perfect BOS. I can see a very good break of structure here. This is a very good break of structure, and whenever the market break a structure, it is expected of the market to what, to retrace. It's expected of the market to what, to retrace. You can see we have the BOS, and this served as a retracement. So when the market was retracing, the market came so close, but the market used the previous resistance on support and pushed aggressively to the upside. So it was like it's going to serve as a liquidity for me. You all know I'm an SMC trader, and I always trade from the 78% key zone. I don't trade from from a support on resistance or a breaker block. I always trade from the 78. So now here will now serve as my demand zone. Here will now serve as my point of interest. Do you know that this my point of interest here equally cleared liquidity? Equally cleared what liquidity? It gave all the entry pattern that I always love to see on the chart. It equally gave what, a clear of liquidity. Can you get now? This is the clear of liquidity. As you can see, this is a clear of liquidity, and now this is my unmitigated point of interest. So when the market was buying, I thought that the market would just buy a little and retrace back to my point of interest. Instead, the market keep pushing to the upside. So now, with what I can see now on a 4 hour time frame, this my zone is an unmitigated level, and it's very clear to me that if the market return back to this particular zone and fails to respect this particular zone, I will know that I have gotten a daily time frame change of character from a 4 hour time frame. Like I've gotten an overall higher time frame change of character. Are you getting me now? Because the market has swept a low, and what I'm now expected to do is to wait for a retracement like this and now start selling until the market now gets to a daily time frame swing, a daily time frame 61% level that we have already marked out on a daily time frame. Here is our trading range. This was our last low, and this was our last high the market printed. You always need to remember that a trading range is the last low or the last high the market printed. Each time the market take out the trading range, it tells you that the overall trend has switched from a bullish trend to a bearish trend. I will always encourage you to find a way and join the academy. It's not really costly. Believe me, when you be part of us, all these things will be very, very easy for you because you'll be able to see the market like a pro and you'll be able to practice a good top-down analysis. Okay, so now with what you can see here, the market is what is currently bullish. So we are still concentrating on buy, and the only time I will stop buying is when the market has beaten this very particular level. When the market beat it, I wait for a retracement to start selling until the market get to a 61% key level. That is now, we will now reposition ourselves to start buying if we actually spotted a change of character around that very particular zone. So what Euro AUD did was, number one, Euro AUD bought, a time came, it started retracing, and then you can see how the market tap into that my higher time frame zone like this. It tap into that my higher time frame zone and is now buying massively to the upside. So what of you that is on lower time frame catching all these sells, you saw a change of character here or something like a BOS to you, and you took a sell immediately, the market returned back to this very particular week. And you know what I talked about week on my YouTube channel, where I told that week are like a hidden zone on the forex market. They are like what, a hidden zones on the forex market. So when the market returned back here, you went in for a change of character on a 30 minutes time frame. Let's see whether there was a change of character around that zone on a 30 minutes time frame. You all know that that is a counter trend. That is what, a counter trend. So as you can see, when the market tested that zone, the market now printed in, this was that zone that we saw on a higher time frame or 4 hour time frame. So you can see we had a high like this, we had a high on a 30 minutes time frame. So you see the market printing a new low. There is no change of character around here. Instead, the market is just consolidating. The market spike above, collected liquidity. Now we can see how the market kept dropping to the downside. The time came, the market swept all this low. The market swept what? All this particular low. This is number one 30 minutes. This is number one 30 minutes time frame change of character. Can you see? This is number one 30 minutes time frame change of character. Although it happened very early around the very particular zone, we had a change of character here as well. We have a chaw here, which the market came back, mitigated a level here. You see the market came, respected that level, dropped to the downside, retrace, mitigate, and then sold massively. But on 30 minutes time frame, this will serve as our major change of character. All you have to do is to wait for a retracement and take up price down from the very particular candle. So you can see, and that was how we went in on a sell. Although I took a sell here within the week, actually, which I equally, I even shared that. I think I shared that actually on the academy as well. So like I can see, so I took a sell from here on Euro AUD and started selling to the downside like this. We go to the, if you go to the free to the free Telegram community. There was a time I posted it. So please don't forget, if you have been looking for a free Telegram community where you want to be catching free signals every time, every week, all you have to do is to use the number you are seeing on the screen and join our free Telegram community. Definitely, you will be catching free signals because I normally drop free signals here every week. So look at that very particular setup here on a 30 minutes time frame. That was how I was able to took that very particular sell that you are seeing. This very particular sell you are seeing here on a 30 minutes time frame. I scaled down to 30 minutes time frame while waiting for that higher time frame level. That unmitigated time frame zone I saw on 4 hour time frame, I took a sell from here and started selling to the downside because I already know that the market is chasing that my unmitigated levels, and that was how you saw me catch all these things. So now look at what really happened here. Look at what happened. Look at when the market tested that zone. Look at when the market tested that zone. Let me remove this thing. Let me remove this. When the market tested that very particular higher time frame zone, most of us that normally use aggressive entry are already on the market, already what on the market. But for those that love using a change of character, have seen we have a chaw here, we have a chaw here. Let me expand it very well so that I can be able to see. We have a chaw around that zone. Look at how the market came to that zone and gave a shift in market structure. The next thing we are just to mark out the very particular zone. We are to mark it out, and then our stop loss need to be under this very particular low. Our stop loss need to be what? Under this very particular what low. That is to say, our stop loss need to be under here like this. This is where our stop loss need to be. Are you getting me now? This is now where our stop loss into. That is, if you want to be using a confirmation entry, you don't need to keep your stop loss inside because you don't know whether the market might want to dip in before pushing up again. But as you can see, people have already used confirmation entry, and they are now on the market. Can you see? So this is what you actually do whenever the market return back to a higher time frame key level, and that is how you keep taking price to the upside. But let's now talk about this thing. Now let's say that you don't know what is top down analysis, and then you were actually following all these cells. You are following what all these cells. You spotted even an SMC pattern around a particular zone on a 30 minutes time frame. You spotted a this thing. You spotted a clear of liquidity here, and you spotted a single candle POY around here. This is it now. Now, most of you remember what I told you guys about whenever the market mitigate a higher time frame key level, and then the market came up, gave you an inducement level around that zone, you yourself will think that the market is not going to respect that zone. All of a sudden, we saw how the market came, reacted and hit your stop loss, and they now break above that very particular zone. Now, when the market breaks above that zone, this is like going to be your trading range on the lower time frame. This is like going to be what? Your trading range. Now, you see, after the market hit your stop loss, you have to reposition your mind from what? From selling to what? To buying. From selling to what? To buying. That is to say, if you didn't see this change of character, you were admitting that this change of character was what? Was an engagement level. And when the market now came and hit your stop loss, now you have to reposition your mind from the long-term sell that had been taken to now to what? For a retracement to take it up. I know it's now looking more confusing on a 30 minutes time frame, but let's retrace back to our higher time frame, which is what? 2 hour time frame. Remember, we spotted an unmitigated level here on a 30 minutes time frame, thinking that the sales continue. All of a sudden, the market came, hit our stop loss, and now you can see the market now pushing to the upside. This is like a typical example of what I mean by what? Trading range. Each time the market hits a trading range or hits a stop loss on a trading range, it tells you that the overall trend or like this internal structures has switched from a bearish trend to what? To a bullish trend. Are you getting me now? Or better still, you can actually want to follow the trend by what? Keeping to the simple rule. If the market mitigates a higher time frame key level, I am not going to be taking any buys, but I'm not going to be taking any sells anymore, but I will now be taking buys. I will now have to look out for a change of character there and now keep selling, keep buying price to the upside. So as it stands now on Euro AUD, what are we expecting Euro AUD to do? So since we are now, let's say that we are now long in the market, we are on this particular trade, the market is pushing in our favor. So we also need to try to understand what the market is actually trying to do again. So as what you can see here, we now have a internal structure point of interest here. We have what? An internal structure point of interest around the zone. The same way we have an internal structure point of interest, we equally have another point of interest around here. You can see this particular consolidated candles here will serve as our range created point of interest. This particular zone now will serve as our range created point of interest. So here are two things that I expect Euro AUD to do. Number one, it is either Euro AUD respect this zone, sell a little. When it gets to this particular fair value gap, price might want to push to the upside and break above this particular high. If price react from this zone and then finally respect this fair value gap, then push aggressively and break this particular external high, and we know that the market is going to retrace back here before I will take up price again. That is to say, I will now wait for a retracement to here and keep buying to the upside, because for the market to break above this particular high, let me remove this thing. You need to understand that this particular high, this high you are seeing here, gave birth to the particular low. So if the market end up taking it out, it has now shown to me that the bullish trend continues, and all I have to do is to wait for a retracement to take it to the upside. I might go to other pairs while I'm waiting for that retracement, or maybe I spotted some a good reversal patterns around here, then I'll keep selling again to the downside. Are you getting me now? But let's say that Euro AUD, remember, let me keep this one aside. So let's say that when the market open like this, let's say that when the market, you see how I'm having different buyers of the market, but in everything I already know what I want to do. So now when the market now, let's say when the market opened and the market respected there, the market came back to this FVG, the market bought again, and then the market started chasing this particular low. The truth of the matter now is that I'm not going to be scared of taking any buy from here, because what? This particular level is going to give me two decisions. It's going to give me what? Two decisions. If the market respect this particular level, I will be happy because my order has been triggered, and I will know that the bullish trend continues, and I'll keep on buying. Are you getting me now? down, I will keep on what buying. I do enter aggressively, but if you don't like entering aggressively, you can scale down to 30 minutes time frame and look for any change of character and take it to the what and take it to the upside on whenever you know this is a 4 hour time frame, right? This is a 4 hour time frame, but when the market return back to that very particular level on a 4 hour time frame, scale down to 30 minutes time frame as I did on 15 minutes time frame, then look for a change of character and take it to the upside. But if you do enter aggressively, you can be on the trade whenever the market opens. So now when the market now start buying, let's say the market bought a little like this and the market now swept me out. Now, when the market now hit my stop loss, I am not going to feel bad. Reason because I have now had another BOS. That is to tell me that the internal structure that is spotted from here, change of character, BOS. Now, it's not left for me to do now is to wait for the market to retrace like this, wait for the market to retrace to a discount level or to an unmitigated level the market must have left when the market is selling, like to retrace back to here and now keep selling to the downside. And that is how I will keep on selling. Let's shift this thing. And that is how I will keep on selling until the market gets to a particular level. If the market takes out a low like this, I wait for that retracement. I will keep on selling until the market return back to this particular 61% level we marked on a daily time frame. Until what? Until the market return back to the particular what level. And when the market return back to that particular level, now boom, I went down to 30 minutes time frame. Look for any change of character around that zone. If I see a change of character, I will now enter on a buy. Let's say I went down to 30 minutes time frame. I saw a high like this, I saw a low, I saw a new high that was swept. I'll now have to wait for a retracement. Like the moment I see that retracement, I will start buying, and the first high I will target will be this particular high. This high will be the first high I will target. Now look at it. Let's remove this thing. So this high will be the first high I'm going to target when the market actually what give me a change of character around this zone. I will now target this very particular high, and then when the market now return up reach that very particular zone, if the market fails to break this very particular zone, if the market fails to break this very particular zone on 30 minutes time frame again, it is I will look for a change of character like this and then keep selling to the downside. Are you getting me now? Or better still, if I see my pattern very well, I might have put pending order there, maybe take price down again because I know that the moment I've seen this impulsive move, market might come here and want to give a little retracement before pushing again to the upside. Or better still, I will just wait for here to confirm if the markets come back here, respect a little sell like this, break like this to the upside, you wait for a retracement and take price to the upside. So this is like how to practice a good top-down analysis. I want to encourage you that it is not only watching the lesson once can enable you to understand how to do all those things. By just watching the lesson 1 to 2 times, the first time you watch it, it could look very strange to you, but on the second time you watch it, it could start looking very simple to you or look a bit strange to you. Then when you watch it the third time, it's going to look more familiar to you. Okay, so for now, this is where I'm going to end the lesson. Don't forget to use the link you see on the description below to join the free Telegram community during the week. We're going to be dropping free setup during the week. Okay, so for now, please, if you truly benefited from what I shared on today's lesson, try and leave a subscription below, subscribe to our channel, like and subscribe to our channel. Equally leave the notification button on. For now, we bring an end to the very particular lesson. Thank you and may God bless you.